This is Gerardo Del Real with Resource Stock Digest. Joining me today is the editor and analyst of one of my favorite newsletters in the business, Exploration Insights, Mr. Joe Mazumdar. Joe, how the heck are you this morning?
Doing well. Thanks for inviting me, Gerardo.
Well, thanks for taking the time. First and foremost, how are you and your family dealing with the new paradigm, right? Social distancing, COVID-19. How are things on the home front?
Well, I think clinically I'm an introvert anyway, so social distancing, it comes natural to me. So that's not an issue. And we just bought a dog, so that's helped out quite a bit. And I would recommend that for anybody. In terms of having something to do during this break. So, otherwise we haven't bought, well, I mean, we're loaded with toilet paper, so we're good for at least a couple of weeks. So,
well, I'm glad to hear that everything is stable on that front. There's a lot to get to. I want to start with the most volatile part of the commodity space as of the last day or two. I mean, silver has been absolutely clobbered. We saw it break below that $13 level. I can tell you from conversations I've had looking to buy physical silver that there really isn't any available at the current price. So I want to talk a little bit about silver and just get your thoughts there, and then we'll pivot to gold. We'll pivot to copper, and then we'll talk ETFs and what you're looking at out there. Thoughts on silver, opportunity, physical silver stocks, any names you like out there? Give me your thoughts, Joe.
Yeah. So, I mean, we like silver when the ratio was like 80 to 90, hopefully going down to 70. Now it's more like, 110, 115. So we got that one really wrong. But what I would say is that I'm still bullish on precious metals, and that ratio, I think, that's a bit of an aberration right now. So in terms, silver suffers, quote unquote, from, industrial demand. It's not a pure speculative, monetary analog like gold is. It's a separate beast. And that sometimes weighs on its ability to take advantage of things gold can take advantage of, like being a safe haven asset. But now that the ratio's blown out to where it is, yes, I would be looking for some liquid silver stocks. I mean, one that I recommended previously was Pan American Silver. Pan American Silver, like post the Tahoe acquisition, started generating free cash flow, basically. Ignoring the one-time Tahoe acquisition in the fourth quarter last year, and now that appears they've made a significant discovery at La Colorada. They've found a skarn deposit below where they're currently mining, so that's a positive. And then you get some option development plays with a potential restart in Escobar in Guatemala, and potentially something, maybe a startup in Navidad in Argentina. So you've got those options. You got a good management team. It's a liquid stock. And it brings you gold and silver exposure. Like most of how they made, generate operating cash flow in Q4 was actually from the gold assets that they bought from Tahoe.
Right.
Yeah. So I would say, yeah. So, I mean, I picked up another good project this morning. I mean, I'm not going to say it right now because I'm still waiting for my subscribers. I just recommended it yesterday. I got a little bit this morning. What I'm looking at right now is owning. Okay, let's just take an example. So I talked to an investor last week, and basically what he's doing is sitting on cash and waiting to get stocks like Apple or Amazon or something like that he could never hold or buy before.
Sure.
So I would take that example of an investment thesis and then apply it to the mining industry. So if you got capital to deploy, I'm not saying sell your current stocks because right now you're just selling into a bloodbath and there's not much point. But if you have additional capital to deploy, then, if there was companies that you could see that you've always wanted to own, and that's what I'm doing, but never could because you always thought they were a little bit too expensive, those are the ones I'm picking up.
Excellent. Let's talk. Let's pivot a bit to gold, because obviously gold leads the resource space, right? Brian London is notorious for saying that you can't have a resource bull market if gold isn't in a bull market. I want to talk gold as a commodity, but I actually want to start with the ETFs, because they have not been acting the way they were expected to act. I would love your thoughts. I mean, it's been, a historic couple of weeks by all means, right? The VIX percentage moves up and down, hourly percentage
Well, the
moves.
VIX topped the peak from 2008. So I think the peak was around the high 50s during that time. And then last week it got up to 75.
Right.
So the market volatility is through the roof, and you can obviously see that with the way the S&P 500 and every exchange is moving, basically. But then in terms of the ETF, I mean, that started, back when it was 2009, 2010, and it loaded up, especially the GDXJ and a lot of explorers and developers back then. Everything was liquid, and you had explorers with no resource, trading at a market cap of $1 billion.
Sure.
And so it's never been able to achieve that valuation again, probably for good reason. But now we're seeing wild swings. Like last week, I mean, in 1 week, it dropped 45%, whereas gold dropped 9%.
Right.
Like a beta of 5 is just not what the GDXJ normally has. It's usually like 1.5 to 2. So that was quite unusual. And it traded at I think one day it closed at a 14 or 15% discount to its net asset value. So there is an issue with the ETF, and I think potentially this trading volatility probably shows people how this ETF may not be the best investment in terms of just, hey, I don't want all that company exposure. This is a diversified portfolio. I get solvency. I get all this other stuff, but really you don't. It doesn't trade like you think it should trade. And if it does that when you need it to trade, like when gold goes up and it's not trading as high because something else is holding it down, it's a little bit more suspect right now.
Makes sense. Do you feel that in the junior equities that we saw that capitulation kind of sell off this morning, that I can't help but notice there's a lot of stocks in the green despite the moves in gold and silver. Do you think we finally reached the bottom in the space for the liquid and well-capitalized explorers, developers, and producers that don't need to go back to the market for the next 6 to 12 months?
Well, that's what I'm looking at. So when I'm looking at picking something up, and I'm not selling anything that I own, but then again, I'm looking for things that I've always wanted to own. But all the ones that I'm buying or keeping, because basically when I put something into the portfolio, I'm thinking that they're funded for at least 12 to 24 months with catalysts.
Right. And
that's what's in the portfolio. There's not a lot of crap in there that I'll dump because it's highly levered and I don't know where they're going to get the money from. So I'd like to keep, I have no problems keeping what I have. But when you have an opportunity to pick up something that you could never get, I take advantage of it. And so right now, in terms of that value proposition, is to try and pick up companies that right now, based on its own net asset value, it's trading at a significant discount. It might be difficult, and it is difficult, to pick the absolute bottom on any of these stocks. But what I would recommend is picking a value that you get with your own work, and you can put a number on it and start picking it up at that level or below. And then knowing that, okay, it might be a V-shaped recovery, but I'll be somewhere in that V, and then I won't miss it, when it does turn. Because like I remember in 2008, when I worked for Newmont, like initially the big thing was financial crisis. Oh, where are we going to get funded? Where's our money going to come from? Okay, no capital expenditures. We're going to reduce G&A, all that sort of stuff. And in a short 2 to 3 months, you turn it around and then you're looking at M&A. Because the gold price rebounded so quickly, and it should. Because now what we're seeing is sort of similar. Like we were just seeing the Fed reduce interest rates to 0 to 25 basis points. That's the target rate. I mean, that should be a positive for gold. But right now, people are thinking recession, and maybe in the near term, people are thinking gold's not going to hold up. But what is going to hold up? As you've got 14 trillion dollars of negative yielding debt out there, it's not improving. It's getting worse. So this coronavirus is showing more stress in the financial system, and then in the end, I think in the medium term, that's good for gold. And now I'm just trying to position myself in those companies I think could take advantage of it the best. Not necessarily levered, but would work in any kind of environment and potentially would offer me, an M&A sort of support, like as a put there.
You mentioned the M&A that followed the previous financial crisis. A lot of that M&A was a gross misallocation of capital.
Yeah, absolutely.
And it absolutely decimated exploration budgets for the following decade, which kind of brings us to where we are now, right? With very, very few significant discoveries being made on an annual basis. Jurisdictionally, where are you looking, Joe? Do you still have the same view today that you did 3 months ago as far as where your capital is willing to go to get that exposure to those potentially very significant mineral discoveries, or are you kind of hunkering down and refining that as this COVID-19 pandemic evolves?
Yeah, I'm not going nuts and buying everything right now, but I've got a list of 4 or 5 companies shortlisted that I'm looking at certain price levels. But jurisdictionally, I would say that from the retail sector, if you want that kind of premium, then focus in on places like Canada, the States, Australia, that sort of thing, because there's jurisdictional risk everywhere. I mean, it's gone up in Chile, for God's sake. But I would say, medium to longer term, my jurisdictional risk or, scope is sort of expanded to include anything people with deep pockets, whether they be companies or strategic investors, are willing to go and fund companies when the market's not there. Because, retail is not going to be, even though we saw in post 2008, lots of financing and funding of everything. And I'm not saying that, and I don't think anybody should be saying all that money went into the right companies that were spending it was misallocated exploration, because more money does not necessarily get you better results.
Correct.
The issue for me now is hopefully people have a little bit more capital discipline and are thinking that, hey, I got to allocate capital to the people, with the projects that make the most sense, that they could find something, discover something that would, and that's really the value added exploration. It's not, hey, I got a cheap warrant, that sort of thing, or hey, I came in with founder shares at a penny. That sort of thing is really not what adds value for us. What we want to do is actually drill something that finds something that somebody is going to want at the exploration stage. And now all we're seeing, and this is going to help, not hurt, the issue about the pipeline of projects, whatever commodity you want. The high value project pipeline doesn't exist for many commodities, whether they be gold or copper. They just don't exist. So this is going to make it even worse, because now a lot of those companies won't have access to capital to actually advance those. That's why I like Trilogy Metals. Despite what's going on with the copper price, South 32 is in there. They're funding the next 2 to 3 years, and Trilogy's not going to need a dime. And really, the pocket of, that the hole in the copper market is, coming in 2025. And this is when this project, theoretically will come into production. And that's what South 32 thinks, because they have to think longer term. We can't commit to a retail perspective, for these juniors. We have to think, well, is it got a chance, to actually fit the thesis that I want? Like, I want a copper project that fits in the lower quartile cost curve, safe jurisdiction, that comes into production in 25. How many of those are out there? Not very many.
Not many.
And how many of those are in the hands of a junior? Much less. So that's what I'm looking for. I mean, that's an example for the copper space.
Are there juniors out there, Joe, that are explorers that you feel have the potential, that have a land package right now that has the potential to yield one of those big monster discoveries that really ignites the base metal sector again?
In terms of base metals?
In terms of base metals, specifically copper.
Okay. I mean, we've got, if the arsenic issue in the concentrates for copper are sorted out in China and other places, that they actually start taking these arsenic-rich copper concentrates, because in the future that's basically where we're heading.
Sure.
Then Regulus at these price levels.
Yep.
They're drilling. They're actively drilling. That's one. And then I bought a real grassroots explorer, like grass, like really grass roots explorer in Peru, that's looking for sediment-hosted copper. I mean, micro caps. So
I know where you're going, and I'm a shareholder and biased, and I wrote a check, and I've been buying more. So please continue.
Okay. Then you say it. I'm not going to say it. You say it. Okay.
Hannon Metals, am I right?
Hannon Metals. And I've known Michael Hudson for a while. So here's one where I'd like to have owned a company that he was involved in, but I didn't see the value in this one or that one. And now I see this one, and then I see him there, and I get more confidence, and I put money into that one. So that's really, really grassroots. It's not for everybody, but it's one that's not going to go up and down based on the copper price, because it's a grassroots explorer, and it's a long-term thing. As you know, grassroots to discovery to production to development. I mean, S&P Global Intelligence, I think, put it at 15 to 20 years or more to do that. So that's where that kind of a stock moves. It moves in a different space than moving with the underlying commodity.
Let me stick to Hannon really quick, because I had a very interesting conversation last week with Quentin Henney, who of course is involved with Hannon, and I'm familiar with Mike Hudson as well. Again, I said it, I'm biased, I'm a shareholder.
Quentin's involved with half the TSX.
So. He's the geologist version of Eric Sprott on the money side, right?
Yeah, no, I mean high quality, absolutely.
But what is it about Hannon at such an early stage that attracts you? Because that's not your typical that's not the typical stock that you see in the Exploration Insights portfolio.
Well, the thing is that we did that with Japan Gold as well, and with that we're looking at new things in new jurisdictions that make sense. So Peru, there's not a lot. There isn't any sediment-hosted copper deposits in Peru that are noteworthy, but the model exists and it makes sense. And they're finding stuff in the southern part of Ecuador, and now they're tracing that basin and that mineralization into Peru. And so these guys picked up a big land package, and they're exploring. And it's really grassroots. It's like geological prospecting. It's still rock chip sampling, some geophysics, and maybe a bit of drilling before the end of the year, permits pending. So it's something I put my money in. Let's see what happens. It's not like one that I'm going to buy and then sell tomorrow. It's like, let's see. Yeah, and you got to really trust the management team that they're going to use their money well. Most of it's going to go on the ground to advance the project. And so as long as I find a grassroots player that I have a lot of confidence in the management team, which is a hard one to find, then that's one I don't have a problem putting money in at the level I did.
Excellent. Any producers, before I let you go, Joe, any producers, be it in the base metal space, the precious metal space, that just for you right now, just scream bargain? And I know there's a lot out there, but one or two that maybe people could do due diligence on that your subscribers have had an opportunity to vet out.
Oh, in terms of base metals?
Base metals or precious. Give me two names that you really like. You mentioned Trilogy earlier. I completely agree. You mentioned Pan American Silver earlier. We've talked Hannon.
Another one I would say is like Lundin Gold. That's a good one in terms of that's just gone into commercial production. One of the probably highest value gold projects out there, and there's not a lot of development projects in gold coming out. So if we do see a rebound, they're going to see it in cash flow as they're converting from a development story to a production story. And Newcrest owns 30% of it, so you have a bit of the underlying support of an M&A bid eventually, So I like that one. I mean, I like Silvercrest. I haven't picked that one up yet, but that's still one I'm looking at. And that's gone down. I think they did an equity financing. I think at like $7.50. It's gone down way below that. But it's got a very high grade project, development project, Las Chispas in Mexico. So that's another one I would look at. And, I always keep an eye out for what Ivanhoe's doing and see if they go below $2. So that's one I always have an eye out, especially if they're not in the development mode and they're more in the exploration mode. So that's what because we made our money on Ivanhoe going from 60 cents to 4.80 because they found Kakula. And it's a great prospective belt that they're still in. So if they use a lot of their money and keep finding new things, that's what really will move the stock more than people wanting them to develop it right now. Eventually it will get developed and Zijin's in there, but really in terms of what made us the most money last time was actually the new discovery at Kakula.
Joe, we've talked gold, ETFs, base metals. I got more names out of you than I'm used to hearing. Is there anything else?
So many. Just buy anything. You'll look smart. Now, but the other thing I would tell your readers is don't ignore the Australian market because the Australian dollar is going to get hit because, China, had the big drop and they might have a hard time meeting their GDP goal of 6% this year.
Yeah.
So that's going to impact, iron ore and every other metal under the sun that they produce in Australia, and they produce a lot. So the gold price in a local currency should go up. And so what you want to do is think about those high quality Australian names that might do well in this environment as well, because not only will they not be competing with labor costs, which is a big deal especially in Western Australia, they won't be competing with labor costs with iron ore or anybody else. Also, you're looking, and this is important, you're dealing with $30 oil. And oil is a big, cost input in a lot of these semi-remote, production, operations, especially in Western Australia. So if you look at that, that might be a perfect little thing where you get the margin. Even if gold stays where it is, US, it'll be higher in Australian dollars. And also you get the margin appreciation with respect to oil prices.
For people that want to follow your excellent work, Joe, where can they find it?
Explorationinsights.com.
Fantastic. Joe, pleasure as always. Stay safe out there, and let's have you back on here in the next few weeks and months as things develop.
All right. Thanks a lot, Gerardo.
Appreciate it.